Celsius suspends withdrawals. Cashing crypto. Here's all you need to know. The cryptocurrency market experienced another major hit over the weekend, causing top crypto tender Celsius to suspend withdrawals from its platform. Before we dive into this exciting update, hello again, fellow crypto investors. Matteo here of Crypto Nights, here to always spread awareness on everything crypto and all the updates in the crypto space. Whatever we do share in today's video, like all other videos, is not financial advice. It's just another guy who's mad about crypto, sharing about crypto, all my experience to spread awareness and education on it. And if you enjoy the content that we do share here on Crypto Nights, please make sure to subscribe below, like the video, and share a comment. This will help us to grow our Crypto Nights community and will help us here on this channel to share more information on everything crypto. With that, let's dive right in. Celsius said it was compelled to stop all transactions on its platform due to extreme market conditions. Well, the suspension sees about $12 billion worth of crypto assets frozen across Celsius's platform, with its users unable to withdraw, swap, or transfer cryptocurrencies on the platform. Celsius's decision to freeze its users' assets is a direct result of the widespread crash of the crypto market. Bitcoin, the largest cryptocurrency, has dropped to its lowest point since 2020, losing about 20% of its value from Friday. Now, the crypto industry has been on a downward trend ever since the lunar terror crash. The effects have rippled through the market. Bitcoin dropped by 25%, Ether by 14%, and even Celsius's native token, CEL, took a hit, suffering a 20% decrease in value. And all of this was before Celsius announced the suspension. Celsius's CEL has dropped by 67% since Friday, after it announced its decision to pause all transactions on its networks. Celsius is a crypto lending platform and one of the biggest players, with $12 billion worth of crypto assets in transactions before its suspension. However, last December, assets on the Celsius platform were worth north of $24 billion, meaning that it has lost over half of its assets. Celsius was founded in Florida with offices in the UK and Lithuania. And before the crypto crash, the company had enjoyed massive growth as one of the largest crypto lenders in the industry. As a result, the network's user base has grown to about 1.7 million. So how does crypto lending work? Well, Celsius acts as a middleman, connecting lenders and borrowers of cryptocurrencies. Crypto lending is a vital component that makes up the yield farming aspect of the crypto industry. Yield farming is important because new cryptocurrencies and blockchain-based projects find it hard to introduce their currencies to the market. As you can imagine, every currency has to be exchangeable, right? That is, have the ability to be converted to other currencies for it to be valuable. This ability for a currency to be tradable is called liquidity. Newly introduced cryptocurrencies have very little liquidity, of course. And yield farms acts as a starting point for these new crypto projects by lending them established cryptocurrencies to help them boost their liquidity. Liquidity is created by locking established currencies in pairs with a low liquidity one to create a larger pool where you can equate the value of the new currency with its pair. The party providing or lending the established currency is called a liquidity provider, or LP. These LPs earn interest or yield on the liquidity they provide. Platforms like Celsius facilitate these transactions between liquidity providers and borrowers. Crypto lending platforms ensure the borrower can return the crypto assets borrowed. Now, this usually means that the borrower has to provide collateral in the form of a cryptocurrency as dictated by the platform's policies. Celsius's valuation last November? Well, Celsius raised $750 million, boosting the platform's valuation to its highest of $3.25 billion. The funding round was spearheaded by the second largest pension fund in Canada, Caisse de dépôt et placement du Québec, and Westcap, a fund founded by former Airbnb executive Lawrence Tosi. Celsius accepts loans from crypto investors to provide liquidity for and fund different crypto projects and investments. The loan providers or lenders are rewarded with a weekly payment of 30% interest on their loans. And this system is the root cause of the issues faced by Celsius over the past few weeks that ultimately led to a suspension of its transactions. You see, the current crypto bear run ignited by the lunar terror crash has increased skepticism in crypto investors, leading to the decline or outright crash of many projects. Many borrowers have defaulted in paying back their loans. The diminishing faith in the crypto industry has also led many investors to withdraw their funds and loans from lending platforms. All of these accumulated in Celsius being unable to maintain its business model. With Celsius losing 50% of the value of assets on its platform between late December and the 27th of May, only a drastic measure like we have seen seemed appropriate. Celsius under scrutiny. When the Terra Luna wipeout was fresh in May, Celsius's founder Alex Mashinsky said that their platform had minimal exposure to Luna and its stablecoin UST. Nevertheless, he encouraged its users to trust their Twitter posts and ignore any contrary rumors from competing services. Just 3 weeks after those comments from Mashinsky, Celsius informed its users through its website of the suspension of transactions across its networks. The website said the transaction pause was to the benefit of our entire community in order to stabilize liquidity and operations while we take steps to preserve and protect assets. Celsius further added on Sunday that its actions are to put Celsius in a better position to honor, over time, its withdrawal obligations. A day before the suspension announcement, Mashinsky still discarded claims of a liquidity problem on Celsius, tagging such tweets as FUD. FUD, F-U-D, means fear, uncertainty, and doubt. Of course, you don't know. It is another popular crypto jingo to dismiss skepticism. Celsius has increasingly become the subject of suspicion in the crypto industry. Its decision to pause transactions is just the latest in a series of issues that have brought increased scrutiny to the platform since November last year. Celsius's former CFO, Yaron Shelem, was arrested on allegations of fraud in a case involving Shelem's previous workplace, Singularity. Now, in correspondence with UK Financial Times, Shelem's lawyers claim that he acted in accordance with the law and strongly and utterly rejects any attempt to associate him with any act of fraud. The lawyers added, "Our client is certain that at the end of the investigation it will be found that he has committed no wrongdoing." Well, following the arrest, Celsius quickly denounced its former CFO, emphasizing that the allegations were unrelated to Shelem's time in Celsius. They added that he was suspended after Celsius got wind, was being investigated, and no longer worked for them. In the middle of Celsius's last fundraising came another block in the long chain of troubles that seems to be plaguing the company. United States Secretary regulators for Texas and New Jersey claimed that the platform's high-yield accounts were similar to security offerings and therefore should face the same regulations. This development led to Celsius being forced to update their risk policies and inform its users that its high-yield investments are subject to regulatory risk. Well, my friends, that is what is buzzing in the crypto space around Celsius at the moment. Thank you so much for watching this. Before you go, though, please make sure you go and check out this video above me. Don't forget to show some support for our Crypto Nights community by subscribing to the channel, liking this video, and leaving all your comments below. And until the next video, this is your host, Matty, saying goodbye for now. Take care. Stay safe, everyone. Bye-bye.